Sagan.
What is up, guys? So you guys probably clicked on this video today because you are looking at getting your very own sports car. If not, you guys are looking at more information and you're trying to figure out what do you need to go in and get your first sports car. The two biggest things you guys are gonna need: one, a consistent income. The only way you're gonna be able to get your car is if you're either able to buy it out cash, or if you're able to buy it out cash, I'm expecting you not to be watching this video. But for most of you guys, I would think that you guys are gonna do some type of loan. So that means you guys are gonna need a consistent income to pay monthly with. And number two, a credit score. By the end of this video, I'm gonna teach you guys how to increase your credit score and qualify to get your very own sports car. Okay, so guys, the first thing you're gonna do is you're gonna go inside. You're gonna go inside the dealership, talk to the sales guys. He's gonna show you the car. You guys are gonna get to know each other better. You're gonna tell him your ranges of your expectancy. What are you trying to pay monthly? If you're getting a $30,000 car, you should look at your car payment to be around $500 a month. First thing we're gonna do is we're gonna talk about finances. And when it comes down to your financing, the biggest things with that is your credit score and your income, and your credit history as well. Smartest thing you guys can do here is you guys want to qualify to get the lowest credit score possible. If you guys can qualify to get a 2.99, that is excellent. That is exactly what you want. Anywhere between 3 to 4%, that is a very low and is a very great interest rate to be having for your car. With that being said, if you have something that's a 5, a 6, any higher than that, you're gonna start looking at about an average or an awful credit, an awful interest rate. And at that point, you guys are gonna be spending a lot more money down the line because of how high your interest rate is. So do whatever you guys can to get your interest rate as low as possible. How you guys can bring that interest rate lower as the video goes down. So that being said, also with financing, it comes with the banks. If you guys want to qualify to get a $30,000 car, you guys are going to need the income. Depending on what bank you go through or what dealership you're at, some dealerships have their own banks and are able to qualify you just based off of your credit score. I know Toyota has their own banking system itself. So if you have a high enough credit score, they will approve you, and your interest rate should be solid because of your credit score, but you will get approved for it. Some dealerships go through other banks, such as Chase. I know when I bought my car, Chase expected me to have at least $1,800 a month. The reason why they expect you to have so much a month is because they expect that you're paying some type of house payment, and they expect that you have other bills besides a car payment. So you may be an 18-year-old kid that lives at home. You're making around $1,500, $1,200 a month, and you're trying to get a $300 car payment, and you have no other bills. Well, the bank doesn't see it like that. They see it as, okay, you probably have a $700 to $1,000 house payment, and now you're gonna have a $300 car payment on top of that. Ooh, man, I don't think that's a smart investment for the bank to make. So you won't get accepted with that. So the biggest thing is, they want you to, in some of the banks, there is a minimum that you guys have to make a month. With that being said, that goes back to number one. You need to have a consistent income, depending on what dealership you're going to. If you can be above $1,800, some I believe is like $2,200, you need to have a solid income, something stable. And if you don't have that, it's not the end of the world, but you're either gonna have to go to a bank that doesn't mind your income not being high enough because you have a solid credit score, or you're gonna have to find a cosign. You can have a very good credit score in some of these banks and it doesn't matter. It's just based off of your income, and they won't qualify you to get the car. If you have a good credit score, that's gonna help you out in two different ways. One, you may not need a bank that is looking at your income. They might just be willing to approve you just based off of your credit score. And then two, if you can get a cosign. I recommend a cosign because it's gonna help you out if you don't have the income that's required. So between the two of you guys, your combined income, your combined credit score you should be able to qualify for the car if you co-sign with the right person, that is. So I suggest that you guys do go find a co-sign if you're lacking the income and you're lacking the credit score, just to get your interest rate low as possible. So we've had all this talk about a credit score. So you guys are probably wondering now, okay, my credit score is not that good. You know, I've never had my first car. I have a credit card, but I barely use it. And your credit score is, you don't even know what it is. Like, so let's talk about credit score. Let's talk about how to increase that and how to get yourself in the best position to get your first car. Before you get your first car, you're gonna want to increase that. And there's several different ways to do that. Me personally, when I was trying to get my first car, quoted at a 740. That was an estimated quote that I got online. And when I went to the dealership, they put me down as a 780. Now, I've had several different reasons why my credit score is the way it is. For example, I did a $2,000 loan on my first car, which was not my first car, but my second car that I actually bought myself. The first car that I actually bought myself was an Audi, and I had to put $2,000 down on it that I didn't have. And so I put that through the bank, and unfortunately, my Audi had problems with it, and I had to do $2,000 worth of repairs. So that $2,000 turned into $4,000. Basically, I paid off $4,000 worth of debt in about a year. Credit score was able to increase because of that. Doing portions of money, paying that off over time will increase your credit score. The next thing that I did after that was I bought my Scion TC. I got that for around $15,000-$17,000. Paid on that for a year, and then decided I wanted to go out and get my first sports car. So I didn't go out and get my first sports car. I didn't go out and spend go after a $30,000 car until I established a solid credit line. With my Scion TC, I had that for a year. I threw a lot of money into that, just paying it off, or not completely paying it off, but getting the amount that I owed down. I paid half of the car off in the first year, and then I eventually sold that car. I took a loss on the car, actually. I had $2,000 saved up, and I paid the rest of that car off, and with the money that I got from when I sold the car. So when when the bank saw that, the bank saw that I paid off like $10,000 just like that. So my credit score once again rose up because they saw that I paid off a car. So whenever you can take a loan on something and then pay it off, it's going to increase your credit score dramatically. My Audi, $2,000 that I loaned, parts for fixing my car, going out, paying off my Scion TC. That was three things that impacted my credit score, got it to where it is today. With that being said, not only was I doing those large amounts of money, but every month I was paying on it. I had my Audi and I was paying like $100 for that car payment or whatever. And then my Scion, I was paying whatever the monthly was for that. So I've been constantly doing that. And then that's just on a big amounts of money. Using my credit card for school, books, and then paying that off. So constantly using your credit to get your credit score to rise up. So if you guys can use your credit, you guys, instead of using your debit card to pay for something big, you can use your credit card and then make little payments on it, and then bam, fully paid off. Most of the time, what I've heard is that you have to pay on something for about 6 months for it to actually impact your credit score. Depending on how big the item is, you're gonna want to pay it off over a 6-month period. That's what I've been told. These are ways to increase your credit score and hopefully build your credit up so you can get your first sports car. Next thing I want to talk about is how to get your car payment lower. If you're buying a new car, there's a lot of play in the market of the car that they're putting you in. You can go in there and the first offer they're gonna throw at you is a $500 car payment, and that to me is very high, especially if it's gonna be your first sports car. Paying $500 a month is very high. The biggest thing is tell them, yes, I do want that car, but tell them that you don't want to pay that much money for it. Like, you want the car, but you don't think the car is worth that much. So if you can constantly show them, I want the car, it's a tug of war game, you know what I'm saying? You have to play with them, show them you're interested, but then show them why you're not interested. And eventually that price will come down. I was able to Not on this particular car, but the car that I was at before. I'm not gonna list any of the dealerships or say any of the dealerships, just out of respect. I knew I was around a 740 credit score. They put me down as a 780, 790 credit score. I didn't have to have my own income. I would have qualified completely fine by myself. They tried to get me into a car with a car payment at 600, I think it was like 606 or $600 a month. And I was like, that's way too high. So then they got it down to 500 for me. And then I was like, man, that is ridiculous. That's still way too high. And I told them my ideal number was just because they had me so high up at 600, I was like at 400. Like 400 is like the highest I could go whatsoever. Next thing I know, they got it down to 450. Told them once again, I couldn't do that. That's way too high. Got it down to 400. Next thing I know, I was in the finance office and they were throwing in all kinds of things, gap insurance. I don't know where they were getting the money to do this, but they're just taking all kinds of discounts and deals off of it for me. So that was great, but I wouldn't pay that much for the car that they were showing me. So at the end of the day, the best tips I can give to you guys is make sure you guys have your income where it needs to be. Increase your credit score. Don't go in there and rush into things. I know you're gonna see the car that you really want. Go in there and make sure that car that you are paying for, make sure that it's worth it to you. Don't just go in full head of steam and think irrationally about things. This car is going to be with you for a while. I mean, if you're taking a loan out for it, it's going to be with you to probably for like 5 years. I would assume 3 to 5 years. So don't rush the decision. Be smart with it. Try to get the lowest interest rate that you can possibly can. Do what you got to do before you go in there to get your car. Get your credit score up. Get your income up. Hopefully, you can qualify for a really low interest rate to save your money, to save yourself some money in the long run. Yeah, guys. Without further ado, man, I wish you guys the very best luck in getting your first sports car. If you guys haven't already, hit that subscribe button. Posting videos like this, posting videos about my car. Looking to start doing some prank videos coming up pretty soon. So yeah, please go ahead and hit the subscribe button, hit that like button if you like this video. And thank you guys for watching. See you guys later.
Are you listening? Damn.